Aloha, everyone. Joshua Hayes at BigWaveTrading.com. All right. What a wild week it's been. It's been full of emotions. I monitor Twitter 24/7, and some of the stuff I'm seeing on there is shocking. There are bulls, there are bears. There doesn't seem to be a whole lot of people in the middle. So what I want to go over is factual weight of the evidence as of right now, where we're at in the market, how I'm moving forward, and how I believe everyone should trade. So first off, I want to make it very clear, I'm a professional trader. I've been living on Maui for 20 years, and I've been doing this full-time for 20 years on an island 5,000 plus miles away from New York City. So let's get that straight first off. Second off, I am never bullish or bearish. I simply trade with what's in front of me. I look at the data, short, intermediate, long term. I take everything, put it together, come up, build a hypothesis, work it into a thesis, and then we run with whatever happens. Third, I am not a member of any particular political party. There is no bias to the left. There is no bias to the right in my investment decisions or personal life. Everything is factual based on evidence at hand in front of my face as of right now. So, with that being said, let's look at reality via the markets. There are a lot of charts I want to review this weekend. I'm making this video public to everyone, so hopefully you can learn something and just understand where we're at in the market. I want to make it very clear right now that in my personal life, I keep running into people that are very worried about a recession, a downturn in the economy whatsoever. Hey, listen, it can happen. Right now, all of the macro evidence, you can go look it up anywhere online. It's all out there. All of the data, non-ISM, ISM, unemployment, whatever. It doesn't matter what it is. You can go look at it. And the weight of the evidence shows that macro-wise, we're still very strong. And the consumer is still very strong. Can it weaken and things get worse? Absolutely. And I remain open-minded. But I've been doing this for a very long time. I was in New York City during the dot-com days. I remember what the sentiment was like before that bear market. And I can tell you one thing. Nobody thought a bear market was coming. I was on Maui in 2007 with real estate people all around me. And I can tell you right now, none of the people that I talked to thought a bear market was coming. Everyone was bullish. Real estate could do nothing but go straight up. Then 2008 happened. The same with New York City in 2000. Stocks could only go straight up to the moon. No other way. We had a bear market. Right now, no matter who I run into in my personal life, everybody talks to me about the recession that's coming, about the bad times that are around the corner. That's just not how it normally is when that's going to happen. Now, that being said, we're about to look at some charts right now, and I got to be honest, short term doesn't look pretty, and it doesn't look real good. What was good this week is that following that, once again, another rejection to all-time highs. Same scenario, different outcome. January 2018, SPY in the summer tries to break out to new highs. We looked good. The IWM was leading. Everything looked great. And then all hell broke loose, and it broke loose fast. I'm mainly a small cap, mid cap trader, so the Russell 2000 is my ultimate guide. So first off, after all hell broke loose, while we have the S&P 500, Dow Jones Industrial Average, and NASDAQ near all-time highs, look at where the Russell 2000 sits compared to its 2018 highs. So we have that in our memory banks right now as we look at the rest of the indices. The S&P 500 tries to break out to all-time highs, rejected. 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 You're noticing a pattern here? Eventually, market bulls are going to get tired of this and they will completely capitulate. But at the same time, it looks like we're about to break down, we bounce back. Break down, we bounce back. Break down, we bounce back. So you know what that tells me? We should expect more choppy, sloppy trading going forward. We should not expect anything to trend until I have things line up. There are two indicators we're going to look at on tradingview.com that whenever they line up on the monthly and weekly time frames tells me to go heavy, 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 push it on the long side. It's when I go in on margin. It's whenever I know to put 5, 10, 20% of my capital per position per trade. I have not taken a larger than 1% of my account capital in any end of day position since this sell-off here in the market in 2018. I switched from working good to cancel buy limit orders to good to cancel buy limit stop orders following this move here, realizing that a lot of the fake long signals that I got could have been prevented if I would have just taken them as they traded up and through the signal date's high of the day. So changed that, added that back on. Guess what? Still hasn't helped. It's been a very, very wild ride. Very hard to make any progress on a longer term end of day basis. Even intraday, the small cap and mid caps that I like to trade, there hasn't been a whole lot of real intraday momentum. There is also no real secondary moves unless there is a major earnings catalyst like in meat. They raised their guidances. We saw a secondary move in meat. Amazing. It's very rare to see this in the kind of stocks that I follow right now. It's normally one and done. So let's get back to the market and look at where we stand. We made a nice stand at the 200 exponential moving average on the SPY. When we look at the Qs, we made a nice stand at the exponential 200-day moving average on the Qs. The diamonds, on a daily basis, we made a stand at the actual 200-day moving average and made it back above the 200 exponential moving average, and now we're back above the 50 and the 100. But on the IWM, something very important to me, I know when the market's healthy. When the market's healthy, my long scans look better than my short scans. That's not the case right now. There's bread thrust on the upside greater than 5 to 1 on multiple days with up stocks to down stocks. It's not the case. There's heavier volume on the way up, which we initially saw on this initial push higher in the Russell 2000, but we didn't see it anywhere else. The SPY, diamonds, QQQ, there was no volume even on this most recent push. And then also the IWM leads. Small caps lead. They don't lead all the time, but in the best uptrends, small caps lead. If you don't believe me, do you remember that 2017 to 2018 move? Even off the 2016 lows following the election? Look at the volume that we saw in the IWM over here. It was very, very, very strong from here to here. Very, very strong volume. Nice move up. Russell 2000 leads the entire way. Hasn't led since. So overall, things don't look good. And whenever I look at the daily, I have the MACD here. There are some higher lows, but there's still no clearly higher highs. And even then, when on the short term, we got a higher MACD than the previous high, when we had positive divergence, it didn't mean anything. So there's just nothing there yet when I look at these charts to tell me there's any reason to be bullish. And at the same time, there's a lot of reasons to be bearish. Now, granted, we can still chop around a lot, but as long as the IWM is lagging, as long as the SPY, the Q, and the DIA is not rallying on heavier volume, and then every time it sells off, it's on heavier volume, look at this sell-off. Heavy volume. We bounce, no volume. We sell off, heavy volume. Bounce, no volume. Sell off, heavy volume. Bounce, no volume. Sell off, heavy volume. Rinse and repeat. Big, tall red bars, no big, tall green bars. Well, there's one right there. Another big red bar, no big, tall green bars. More big, tall red bars, no big, tall green bars. And now we're seeing big, tall red bars again. Keep it simple, stupid is a motto that I use in my trading. Until you see this dynamic flip where we're rallying on this kind of volume and it's green, and we're selling off on this kind of volume but it's red, there's no real reason to be super bullish or bearish here moving forward. I would expect a lot more chop, slop, and volatility, especially knowing that the market hates uncertainty. On that end, this is the most uncertain presidential administration ever. Want to remind everybody, don't care. Don't care if you're a Republican, don't care if you're Democrat, doesn't matter to me. All I know is that the market hates uncertainty, and when you have to worry about somebody tweeting something every day, that's not really going to instill any confidence. Then whenever you don't have to worry about a tweet, you get some kind of random news out of the White House that we're going to magically delist Chinese securities. That doesn't instill a whole lot of confidence in the market. And then whenever you take that on top of a Fed that's behind the curve, the U.S.-China trade war, there is too much uncertainty right now to think that the market can work its way through all of this and just be nice, smooth sailing from here on out. That's why the Russell 2000 is lagging. That's why the market is sloppy and choppy, and we should expect that to continue moving forward. Now, I took away the trend lines here, but we got a downtrend line. We got to get above. At least we're holding this uptrend line. If we break below that in the moving averages, watch out below. There's still no real positive divergences whatsoever in the RSI and MACD, and I know short term that one's trending higher, but the RSI doesn't confirm it. So until the Fed is ahead of the curve and we are no longer inverted and we are at least flat, until we can stop worrying about the random tweets and the random news from the White House, and until the U.S.-China trade war is in the back burner, there is no reason to think it's going to be smooth sailing from here, especially when we're about headed into another new election cycle. So keep all of that in mind as we move forward. Now, there is one chart I want to look at that always is my top one to keep me on the right side of the market. This is a daily chart of the SPY that we were looking at. This is called a Madrid trend squeeze indicator. I've removed there it is, and there's the time segment volume 24. So on a daily, we're just going to look at the SPY for this one. Actually, let's not. So here's a daily of the SPY. Look at this indicator. It's red. Look at this time segment volume. It's red. Do you notice this uptrend here? They were both green on a daily basis. Notice here when it's moving up, it's green. They're both green. Here, they're both red and negative, and you notice that the market, once they do go red, they stay red. You can have a mixed uptrend with this being green and then this being red. But when they're both red or they're both green, that's on the shortest term when you want to be on that side of the market. Right now on the SPY, red, red, the QQQ, daily, red, red, the diamonds, red, red, the IWM, red, red. Now this is short term. Longer term, for me to be extremely bullish or bearish about the market, to be completely all in and going in with margin with my new overnight swing hold, swing trading, trend following trading, I need to see my time segment volume green on a monthly basis. And here's why, in case you don't know. Sadly, I only have data on the Russell 2000 going back 2003 on this chart. But if you look at the time segment volume on a monthly basis, when it's green, especially with M trend green, good things happen. We move up. Notice before this uptrend, the M trend and the TSV was red. We all know what happened from 2000 to 2002. But when it's green and the moving average line and the overall trend of TSV is up, good things happen. Monthly basis. When it's red on M trend and TSV and the TSV moving average line is moving down, bad things happen. Once again though, green, moving average line moves up, green on M trend, good things happen. We're mixed here with the two indicators. We're choppy, right? Then once again on a monthly time frame, we go green here on the time segment volume with it trending up. We're green with the M trend. IWM does good. We're good here on the M trend even though time segment volume's doing bad. Notice how we keep going up. But then as soon as the M trend turns on a monthly basis with the TSV already red, we have our pullback. Then, once again, when we go green, and we're green here, good things happen. The time segment volume has been red with a downtrending moving average line since July of 2018. Notice what the IWM has done. So with that out of the way, let's look at the monthly on the QQQ. Not good, but that's green. hence the choppy overall market. The DIA, time segment volume. Notice when it's green here and green here, this is the easy money. Quote, quote, easy money. There is no such thing in the stock market. Notice, though, with the TSV red and this green, we're not really making any real progress, are we? Which now takes me to the SPY, since this is what I trade, put, call options intraday when the small caps aren't moving intraday, when we're out of earnings season, when my end-of-day positions aren't working, my focus on the SPY. Right now, you'll notice here, green, 2017, the entire year of 2017, we're green and green. Notice how nice and smooth it kind of was, except for early on in 2018. Then all hell breaks loose once TSV goes red, once we lose that green on the monthly basis. Now we basically have gone nowhere. Notice TSV has been red the entire time. So there's your long-term look at SPY, which always keeps me in the right overall mood of the market with size and conviction. And this is what we look like right now. There is no reason to be bullish here for anything longer than a bounce play. And then here, you want to then add another layer of when to know if you should be on the right side or not. I use a 3 and 9 exponential moving average. The 9 EMA is what I call the trade line. I use the 9 EMA and the VWAP intraday when I trade stocks. It's all I use. VWAP, 9 EMA, volume, and then I use Fibonacci retracements following any huge morning push. If the VWAP trade line and Fibonacci retracement levels line up, great. But this video is not for intraday, it's for end of day. So I want to show you something. We're back above the trade line, but the green line, the 3 EMA, is not above the 9 EMA. So we're red here, the 3 is not above the 9. There's no reason for me to be bullish. Notice here, when the 3 EMA crosses the 9 EMA here, and we're red here, we trend lower. Notice when the green goes above the red, and this is green, but this isn't green, we chop around. Then the 3 goes back above the 9. Now we got some green in TSV. M trend is turning. We move higher. Notice the 3 MA crosses back below the 9. We're already red on the TSV and the M trend. We move lower. So at the very latest, or earliest, until the 3 is above the 9, there's no reason for me whatsoever to feel like I'm missing out on the rally. Oh my God, I'm missing out on this bounce right off the 284 level. What an idiot I am for not buying calls at the 285 support level, especially whenever it lined up with the 200 exponential moving average that you saw in my telecharts. So, whatever. Until the 3 is above the 9, until this goes green, this is just a dead cat bounce until it's proven to not be a dead cat bounce. The IWM, 3 is below the 9 still. The DIA, 3 is below the 9. The QQQ, 3 is below the 9. Until I see the 3 above the 9 and either one of these turn green, there's no reason to feel like you're missing out, because before any big trend can even start, the 3 first has to go above the 9. These will get green, and as you can see, you're not going to be late to the party. So for everybody calling a bottom here, there's a lot of short-term evidence that suggests you're wrong, especially whenever new lows are now beating new highs once again. I think it was 100 to 60 or 64, whatever it was, following Friday's session. But there's not like we're pulling back here and still keeping more new highs than new lows. You know, things just aren't lined up right now. So we should expect a lot more chop. We got US-China coming up, and then after that, we have an FOMC. So it's going to be sloppy and choppy leading into that. But quantitative easing is going to be out there. The Fed says that they've got all this going, that they're going to throw at this market whatever they can to make sure it goes up, and the macro still isn't weak. So longer term, we'll probably move higher, but shorter term, we should expect some more chop. And if everybody out there thinks that the crowd is too bearish right now by looking at the AAII, the CNN Fear Greed Index, I didn't look where it closed, and so what I'm going to do right now is go look at it on my other computers. It's only at 32. I've seen this thing in the single digits. And the other thing is the Investors Intelligence Survey, it's 55% bears to 17%, or 55% bulls to 17% bears. every major market turn, like this one right here, there's more bears than bulls. So it really is important whenever you see more bears than bulls. We saw that in 2016 on the lows. Golly, we got to go back that far. So right here, we got more bears than bulls. Look at what happened. Right here, we got more bears than bulls. Look at what happened. Now, part of a normal pullback in an uptrend, you're not going to have more bears than bulls, but still, 55% to 17% is ridiculous. So let's just keep all of that in mind moving forward. Now, with that being said, there are still some winning stocks out there, but I want to show you how difficult it is to hold on to them. So the past week, I finally started to run out of new long signals that were actionable. Normally, whenever I like a chart, this is Telechart version 7, by the way, I go long a stock. I don't need it to confirm via stochastics, MACD, RSI, TSV, Madrid trend, because if you do that, you are going to miss a lot of good trading opportunities. So I was just throwing 1% darts out at new long positions. I haven't placed a 5%, 10%, or 20% trade in any single long position since this top in 2018. You want to know why? Because things haven't lined up. Russell 2000's never led. We've never seen volume on the upside. And my beautiful chart patterns, the very few that have formed, only less than half have worked. The vast majority are failing, with the others not triggering. But there still are some good stocks, but I want to show you how difficult it's been. One of them is OSN. With this white arrow, I'm a little late when I added it to the system. This was the long signal on OSN back here. We have heavier above average volume, candle over candle, pocket pivot point signal, and a surging green bop. If we look at it closely, this is what it looked like off its 50-day moving average. That being said, moving forward, it's been a choppy, wild ride. In fact, I was almost knocked completely out of the position here. 210 was my final stop. On this day here, it hit 210. But it didn't, at Interactive Brokers, it didn't trigger or fill my stop or send it to as a market order. So I got lucky, and I'm still long OSN, which is currently up 113% in about a span of 3 months. But I got lucky there. I should have been knocked out of it with this session. But I didn't get knocked out. I'm still long, some of it, not all of it. But still, this chart right here shows you how choppy and difficult it's been. Another one that I've been long that's hit new all-time highs is ZYXI. You can see the arrow right here. This was my long signal. This is what it looked like when I went long. ZYXI was in my top perfect speculator scan, which is built off the book, The Perfect Speculator by Brad Kodeshwar. Candle over candle, heavier above average volume. But notice, BOP was going the wrong way. I normally don't take new long positions when BOP is going the wrong way. But I took it because overall, the trend in BOP was moving up. So I said, what the hell? If this signal triggered right now today, I don't take ZYXI. I don't take it. But ZYXI worked brilliantly. But even then, do you see right here, this moment in July? Normally, this would have been my final stop, but I figured I'll give it to right here instead. Had I not done that, once again, I would have been knocked completely out of ZYXI here, and here we are at all-time highs on ZYXI, and since that long position, it's now up 169% in right around 6 months. So, great, but before 2008, this shit didn't happen. Shit was nice and smooth and uptrending, which is going to take me back to a point that I forgot to go over with the big cap stocks. I used to write for realmoney.com back in 2008 before they did massive cuts to all the new hires. And one of the things I was writing about on realmoney.com that I was getting a lot of flank for back in 2008 was all the big cap stocks that looked like they were topping. So in this most recent market cycle, some stocks like ROKU went on a crazy run. SHOP went on a crazy run. MKTX went on a crazy run. Compare the pullback right now in MKTX compared to any of its other pullback during that run. Compare ROKU's pullback right now to any pullback during that run. And we can start to look at a lot of other ones. Twillo, it's already been kind of sloppy. Look at its pullback right now compared to its former run. WDAY, which was sloppy on the way up, look at its pullback compared to its run. DGII, this is like a tech leader overall. It looks like 1, 2, 3, 4 tops here. Let's look at PEGA. PEGA, look at how sloppy this is. This looks like a possible head and shoulder. There's the head, left shoulder, right shoulder. AVLR, look at this thing. This looks like another shoulder, head, shoulder. Compare this pullback to any of the pullbacks during its uptrend. So a lot of the best stocks that I was tracking are really starting to look very weird and like they have actually topped longer term, that this, while this is tradable bounce, we should expect resistance moving forward. So if that's not your bag, let's look at some of the big caps. Look at Microsoft's uptrend, which wasn't that great anyway, and look at how it's trading now. Look at all the gaps, and look at all these red bars, and look at all these tall red candles. That doesn't scream bullish to me. Apple, gap up, fail, gap up, fail, gap up, fail, gap up, fail. Will this one work? Doubt it. It might, but still, once again, you know, this was ugly, and now it looks like we're V-ramping to the old highs. We'll see how this turns out, but these are not clean charts. You want to know what clean charts looks like? By the way, with Apple, which I traded in 2004. Let's see. Man, oh man. 2004. Oh, that's right. I got to do this. Okay. So what did it look like in 2004 on a weekly basis? Look at it. Look at kind of like how nice and smooth it was. Okay? Now compare that to how it looks now. There's nothing really smooth about this. It's all kind of sloppy and choppy. And if we just go down the line with all these FANG stocks, we're seeing the same thing. Look at Google. Gap City, and it can't hold any of it. Like, it's just ugly. It's ugly, ugly, ugly. Facebook. You know, there you go. Shoulder, head, shoulder possibly. I don't know. We'll see how it turns out. Amazon, you know, I mean, none of this looks like, you know, let's compare this uptrend in Amazon, which was not clean, by the way, compared to how it's trading now. All the big, tall red bars. Where's all the big, tall green bars? Netflix, you know, does this look like a bullish pattern to you? I mean, NVDA already hugely off its highs. Compare that uptrend, started to get sloppy, but still worked its way higher. Now look at it. Granted, could it be bottoming? Sure, but the bottom line is things just don't look good right now, which takes me now to how I'm trading the market currently. So like I said with ZYXI, I wouldn't take that trade today because of BOP alone. So this past week, I had very few long signals, but the ones that I did have worked. And we'll look at, I'll just go ahead and show, FG. FG was a new long signal following Thursday evening session. It worked on Friday. LTM was a new long signal on October 1st. It finally triggered on Thursday. Worked again on Friday. Hasn't worked by much, but it's worked. So FG, LTM, these are the few trades I made, and EURN were all of my new long trades this past week. All speculative in nature, none of quality. EURN, this is my first signal. Candle over candle, heavier above average volume, increasing green BOP. Gaps up, doesn't trigger at 922. I don't want it on a pullback. I only want it back up and through my 922 level. Happened for 1 minute intraday. Couldn't call the order back on fast enough on the second. So nothing I could do there. But following the second, I have an add signal. This is an add signal. Bullish hammer candle over candle, above average volume, increasing green BOP. Got filled, worked out, but guess what? This is another add signal on EURN. Guess what happened? Once again, didn't get filled. The trigger and limit, 958 is my good to cancel buy stop limit order. You can see what the low day is. Missed it by 2 cents. So I missed it here due to it only being below my first level for 1 minute. Missed it here because I missed it by 2 cents. That being said, this would have been a 3% position, and it's working for now. Do you know what EURN, LTM, and FG had in common? Everything lined up. Price, volume, BOP, RSI, MACD, stochastics, TSV, and Madrid trend squeeze indicator. They all lined up. So, following Friday's session, Big rally in the market, right? Big rally in the market. What's missing? Not only was volume lower, but it was significantly below average. So following once again our heavy volume sell-off, the SPY has rallied 2 sessions in a row on lower volume, culminating with Friday's below average volume. IWM, lower below average volume. QQQ, lower below average volume. DIA, lower below average volume. So a lot of things are suspect here, which then now takes me to the new long signals. I need everything to line up. So we're just going to go over the quality ones. But initially on Friday, I saw FSS. This interested me. On this chart alone, I'm very interested in FSS. On VICI, on this chart alone, even though volume's below average, it's heavier than the day before, I'm initially interested in VICI, though I do not like this in this chart. Then MTEM flagged in my perfect speculator scan. It's interesting, but do you notice this volume surge isn't bigger than here? And there's this red in the chart. And then the final one is a stock I'm currently long, hence the arrow right here. This was the signal date. GFF. It looks like a possible add signal. Granted, volume's not above average, but it is heavier, and there's max green bop. So now before, though, I take these, I now have to run them through secondary tests, and now we'll go look at the charts on stockcharts.com. All right, so now we're looking at FSS on stockcharts.com. So once again, I want to see confirmation everywhere. I look at RSI. While it's curling up, the overall trend obviously is lower. No good. MACD, already, now this rules out the trade for certain. This line is below its moving average line. Done. Stochastics, a small curl, but overall the trend is down. That immediately rules out FSS. VICI is next. I look at RSI. Perfect. That's good. MACD, good. Stochastics is good. VICI could still be considered. So we have that in there. MTEM, I wish it was going the other way. Sorry about that. And while this is good, short term, it's kind of a curl lower, histogram's lower, but the stochastics, this kills MTEM. Hard downtrend. MTEM is removed. So now we go to the last one, GFF, and I flagged other stocks in the speculative section. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 other stocks I flagged for consideration. Ruled them all out because they didn't pass the test. Now we look at GFF, RSI, fails. So basically, every one of these stocks but VICI has now been ruled out, which now takes me to my final test. Remember my trusty TSV and M Madrid trend squeeze lines? So now, just to be sure, we go and look at FSS first. That did line up. It's green and green. Even though this is going the wrong way, even though this moving average is curling lower on the time segment volume, they are green and green. So if it wouldn't have been for failing on the stockcharts.com, still might have considered FSS. So let's make that very clear. Now I take VICI through the test. No good. Passes on M trend ever so slightly, but time segment volume is red. This is my most important indicator. So now VICI, which was the last potential new long position, has been ruled out. But let's just go look at MTEM, ruled out with TSV. Let's look at GFF, not ruled out, but still M trend's going the wrong way. But as we know, it failed on stockcharts.com. So the bottom line is I'm taking everything through a strict series of tests. And if you want to know what FG looked like, going into the previous session, this is what it looked like when I looked at it. TSV was green. M trend ever so slightly was green. Let me go ahead and move this chart over so you can see that little green in there. Was green. So FG passed the test with the green in both of those. Remember LTM that we just went over? LTM, green, green. Passed the test. Remember EURN that we went over as a new long position? This is what it looked like on that day. Green, green, passed the test, and we don't even need to go back to stockcharts.com, but it passed the stochastics, RSI, and MACD test. So this video is very long, but it should make it very clear. I am very detail-oriented. I do not know why I don't get asked to be on podcasts, radio programs. I don't know why I don't get asked to write for websites. I don't know why I don't ask to be a special contributor on websites. But even though I live on Maui and it appears that I just enjoy a kickback-laid surfing lifestyle, I take this shit very seriously, and I'm very detail-oriented. I trade intraday when the end-of-day stuff is not setting up, and it's not setting up. Intraday, I'm learning new styles and methods to trade. Called out ROKU in our chat room. The bottom bounce off the 100 level. The damn thing traded up to 109. The options I was watching moved anywhere from 60% a week out to the ones that expired on Friday over 100%. I also looked at Bank of America options this day for some odd reason. They were 10 cents whenever I was initially looking at them. I have no clue what it closed at, but I can guarantee you those October the 4th options didn't close at 10 cents where I was looking at them. But I looked at Trade SPY intraday. Living on Maui, it is tough to trade intraday, but the bottom line is I take this stuff very seriously. I'm a very, very hard worker. And I can tell you right now, I've done the work, and I can tell you this much. There is no point in being bullish or bearish here or having conviction behind any trade until the 3 and 9 is lined up, Madrid trend and TSV is lined up on multiple time frames. And on the weekly, you can see it's weakening. TSV's already been red since before the downtrend started on SPY, and it's been red since 2018 on SPY. And this is mixed. Until everything is lined up on more than one time frame, there is no reason to be bullish or bearish. In fact, if anything, you should be bearish. However, the macro data suggests that long term, we shouldn't be bearish for very long. For now, we need to think that better than expected things are going to happen in the future. Once again, I know this was a very long video. Thank you for watching it. If you enjoyed it, please like it. If you have any comments or questions, please leave them below. Once again, I apologize for it being a very long video, but I feel like it was very important to go over everything in detail so you guys can know exactly what I'm looking at and why I'm currently in the situation that I'm in regarding the overall market, which is basically neutral. Longer term, still bullish. Everything lines up and says that I should still be bullish longer term, but I've got to wait for things to line up. There's no point in saying, yep, we've bottomed, which I saw a lot of on Twitter. And at the same time, there's no point in saying, yep, we've topped, which I'm seeing a lot of on Twitter. Keep an open mind moving forward. If you're having trouble in your personal trading, I offer a 2-week free trial on the website. Just go register. I'll have a link in the description area of the website. And if you want to join a member of Big Way Trading, I only charge $300 a year for the gold service and $600 a year for the platinum service. You should be able to make that within 1 or 2 good trades on my site immediately. I'm also always in my chat room, always, morning, noon, and night. I might live on Maui, but I only leave my house to go surf. If I'm not surfing, I'm in front of my terminals. So with that being said, have a wonderful rest of your weekend. I know it was a long video, but there was a lot to go over. Aloha, everyone.